Okay, so I'm going to have a look at how to use the fibs to measure price action and get a sense of what way price action is going to behave on the breakout. So what I'm going to do is I'm going to backtest just to show what happened previously, so we can get a good idea of how to read it. Yeah. And I'm going to put it on log, and then I'm going to put it on daily, and that lets me look at a lot more price action. So here is the previous all-time high, and there it is off log, like that there, and then there it is on log. Where's it gone? Yeah, that's it there. Okay, so it's a bit hard to imagine that the all-time high was in 2017, 5 years ago now. Long time. Okay, so let's have a look. Let's have a look at just an idea of what can we expect. Yeah, what can we expect? And normally, with an arc, is you would look at the previous arc. Okay, the peak of this one, and you'd simply put the fib on it here, from the bottom to the top. So from here to here. Okay, and you'd look to see the pump, and you can see the 272. Normally, in a normal pump, you'd be looking for the 168, but when it goes parabolic, is you look at the 272 as the target. Yeah. So from this is we get this. Yeah. So let's just look at by doing that, what do we get from it? Yeah. So now I'm going to start with here is look at the support line of the 236. How much it used it as support and resistance. How many times it came back to it, and then the takeoff was here. Yeah. So now you see a pump. It goes all the way back to the top. I'm going to relate this to where we are now after this. So remember this, is that when it goes back to the previous peak, it has a tendency to reach it and then get rejected. It came back onto the 786, nearly even hit the 702, and then broke through. So you can expect that when we hit the $1.97, that there'll be a rejection, and most likely when we measure it, it'll be back to something like this, the 786, the 702, and then it'll have the breakout. So now look, it pumped again and hit the 1272. Now look how accurately it went up to the 1618, to the T nearly. What's going to be interesting about this, when it breaks the actual all-time high, is that this was the all-time high. So this is all unknown. This is part of why I want to point out the value of the fibs today, is everything above this line was new territory, new space moving into it. So how do you put an indicator on it when it's moving into a new space? And then look at the accuracy of how it came up to 1618. Like it literally hit it to a T. Got a rejection back to the 272. Again, bounced on it. Bounced between the 414. One last time. And then up it goes. Breaks to 786. Back tests it. There might even be a little bit of a back test in there. Back tests it. And again, up it comes to the 27727. Okay, peaks. Back onto the 786. Bounces. Down to the 618. Nearly down to the 414. And again, finds itself back up here. And then it floats on. So you can see how the fibs, as we're mapping out price action, how it literally dances through the fibs. So that a general way to look at it is that when it breaks one, you go to the next. When it breaks another, you go to the next. If it starts to breaks another, then it retraces. Okay, when you back test it, when you test back to here. So why am I pointing this out? Is when it comes to our targets. So we know that when it's going to come back up to the 197, strong chance it's going to hit this and then do a retest, not a retest, a rejection and a back test. So we'll be hitting targets up here, but then after this we'll be expecting a retrace arc. So we'll be expecting short. So there'll be a short opportunity here, and we'll be cautious not to get caught in looking for a long and then get caught in this going on here. So this is why I'm pointing this out today, because just prepare us for the bull trend when it kicks in, yeah. And then also as well, relating it to the value of the fibs is now look at this. It is also the 3 steps up. 1, 2, 3. So we know that this one here is there will be a retrace, but this one here is the 1, 2, and then the push up, the first push away, and then the retrace, up we come. And again, this is when we know there's going to be a lot more sideways. We know that the arc will do a long sideways here, yeah, and it'll set a W, and then it starts to set the scoops. 1. Now where can we see these? The scoops are always a bit tricky because there's 1, 2, 3. There's 1, 2. There's 3, but one of these has to be the 3, 4. I'd even say this would be the 1, 2, 3, 4, 5. Okay, and then the 3 scoops are in that. So, but the point I'm trying to make is that look how it comes up to the 1618, and then we get this long sideways going on, and look how it's dancing between the 1618 and the 1272, and then finally the pump, and up we come, hitting our blow off top. So this is what's to be expected on the next pump. This is where we're going to go. So we're going to map that out in a moment. So has anybody any questions? Has anybody any questions?
The same levels would work for any day.
Say again, you're very blurry there.
So the same levels would work for setting up the arcs as well, not just for the daily levels. Like we Could we use the same levels for the 4 hour or the 1 hour?
Oh, absolutely, yeah, absolutely, yeah.
Okay.
Yeah, exactly the same. Exactly the same. Is you'll see with regards to when we do get the bull run and this pump is it excuse me, it'll happen so fast. Like if you look at this, let's say from here or even here is the 19th of March 2017 to the 5th of January 2018. Okay, well, it didn't happen that didn't happen that quickly. But if you take this out of it, is the 18th of May to the 13th of December. That's a long period. What, May, June, July, August, September, October. There's 5 or 6 months of sideways here. So if you look at this, is from the 18th of March up to here, the 18th of May, March, April, May. That's 2 months. And that's just 2 months. Now this is on the daily. So when you look at this, is when you zoom into it, there's 50. I'm looking at this one here. There's 53% in one day. That's just a day. Then it retraces the next day, 46%. And in that day, it comes down and then it goes back up. So it went down 46% and looks like it can back up maybe 35%. That's all in a day. So again, this is an arc. You can see the arc here, you know. But then look, it's played out over 1, 2, 3, 4, 5, 6, 7, and pop. Like this is a week. This is a week. So the here's another one happened in a day, 43%. So very, very, very different than this, what we're used to. This here is just there's so much of a world of difference in the volume and what to expect. This is why I'm bringing this up now, because when it kicks off is it'll take a bit to acclimatize to it. Like there's a 74% pump in a day. That's after a 40% pump the day before. The week before there was a 70, a 46, no doubt another 35. So now this one here is this retraced in one day 66%. And then in the same day went back up 810%. This is just madness. Crazy. And then it retraced the next day 59%. So you can see it's enormous. Here's a week, and then 1, 2, 3, 4, 5, 6. Here's another week. Here's another week of craziness. And all the people that loaded in here, you know, look how many people got wiped out here. Super nasty as well, yeah. So you can see the value of dollar costing in, and like this. How do you read this? Look, this goes all the way up here. I think this is easy to read in the sense that when it goes up this high, you know there's going to be a retrace. But for this to all pump like this, okay, you'd probably be thinking there's going to be a reset. But all in one go, in one day, in the first half of the day, before it goes back up, crazy. So I think the part of what I'm trying to stress here is the dollar costing is, and making sure we're in the right direction, you know, and then as it goes, we can load up with it, you know, and when the profit presents itself, we take it. Is we go in here and we think we're getting this and it pulls this, is we get to come out with maybe a little hit, we can turn and go down with it, we can move with it, yeah. So we need to stay very, very adaptable, yeah. But equally, we'll be looking at the targets. Look, it's hitting the 702, it's hitting the golden pocket. You know, is the MAs will be seriously in the overbought. So the MAs might be quite difficult here to read because, like, well, if they're so in the overbought, at what point do we really see the turn and the correction? So again, it'd be very hard to read this turn and the correction, except for the fact that, look, it's coming up to the golden pocket. It hit the golden pocket, and okay, and then it next day is it got a retrace, it came back up, okay, and that's all it got. And then it got that far, you could nearly start to say, well, you know, is this going to go up or is this going to fail? Is it going to get a rejection? So now, because often, a lot of times, like hitting all-time highs is golden pockets, a lot of time price action get rejected at the golden pocket before it comes back up and tested. So that's common. So we'd be aware of that and be prepared for something like this, yeah. Not necessarily all this. This part of what I'm trying to say as well is I don't think you can prepare for this in the sense of going, oh yeah, it's going to go all the way back down here, and then think, okay, now it's going to go all the way back up here. There's no way anybody's actually reading this, so to speak, and going, yeah, this is what's going to happen. So we really have to DCA, you know, and then stay very agile in with the direction it moves in. And then once we can see the direction confirmed, is then we start to dollar cost in and also dollar cost out. Dollar cost out. So now you have this craziness for 2 weeks, and then it comes back to this, and then it floats along this. It goes quiet. This, and again, lots of sideways action here. Lots of swing trading here, yeah. And again, it'll nearly send you to sleep for the 4th of April. 4th of April to the 27th of April. So now that's 3 weeks. So 2 weeks of craziness, 3 weeks of sideways action. You know, and then it kicks off, gives you a little push, you know, a little sideways, and then look at this as more systematic, yeah. More systematic. So now this would be much easier to trade here, because very simply is, look, it's pumping. Look at the retraces; they're all very small. Is you have a nice retrace on this, or a nice liquidation price on this. Is you can go in once it's shown itself, then you can go in, yeah. Now what I mean by liquidation price is it's a low entry with a decent liquidation price. So the lower the entry, the less risk you have on the liquidation. When it goes your way, once you see it going your way, when it's confirmed, then you can load in more. You know, so that's the thing about dollar costing here, is that you can actually pull the liquidation price away enough to let price action do its thing. You know, and then we're in, and then that would be sweet. DCA in here all the way is we would have an amazing 28th of April all the way up to the 17th of May. So that'll be 3 weeks of that lift. But again, you can see that when it moves, you can see it moving here. Once it starts moving through the 786, again, look, here is the high, the all-time high, the previous one. Is now we're looking at this target. Okay, if it breaks through, we're going to the next one. Little rejection, pushes through, you know, and then again the 618. What are we looking at as a potential limit here? Is the 618. So the first step. Okay, now we're on the second leg, you know, and now we've got this sideways. So when it hits the 618, okay, is we're looking at sideways here, yeah. And again, some people will be thinking, are we topping out here? Is this the limit? Is when you zoom out and you look at the 1 day, is you can clearly see that there's one leg and then there's 2 legs. Okay, and you wouldn't count this as 1, this is 2, and this is 3, simply because of the size of them. Is look at the size. This is 1, this is 2. Now we got this sideways going on, and this sideways went on for months. Again, these are dailies as well. Lots of arcs in here. and we'd be back to clearer swing trading. Lots of simple swing trading in this, and all it is a series of arcs. We'll put there like that. Small one there, and on and on and on. But when we hit the second leg, again we can expect this. Now we're not saying that we can expect it for 5 months, but we can expect that it's going to go sideways. Yeah. So again, here we are. Look, it kicks off again at the 414, pushes through. Okay, and again, a lot of people will be thinking here now the 786, how's it going to behave? Up it comes. Look, at back tests it a lot, and then here's the scoops, and then the final push, and then here we have the back test to the 786. So this is pretty much what we're once it kicks in. This is what's going to happen, yeah. And how long it's going to run over is a good question. But this one when it kicked off is kept going for a good year, yeah. I think we're in a different situation now in this one, because here now this is a little bit different than Bybit. The bottom of the bear market here is 11 cent and 4. 11 cent and 4. I think it's 10 cent and 37 on Bybit. So here's the bottom. So here it is. Here's the bottom. This is the beginning of the new bull run. So this here looks potentially like it how can I say it? It looks like the first leg. It looks like the first leg. Okay. It looks like the first leg. So what do I mean by that? Is people talk about what's the potential target of this bull run, yeah? Or the next leg of it. So when you this is the run log now. Okay, so people are talking about. I'll take it off log for a sec, yeah. So when people talk about you take the measure of where's this going to pump to and it's going to go again from the bottom to the top, and again $1.97 is when you take it up to the 272. People are talking about it pumping to $4.32, $4.50 at a minimum. At a minimum, they're talking about that. I know CoinSkid is talking about it going to $27. Excuse me, which I think is actually far more realistic. But the first leg, the next pump, the next wave, is looks like $4.50. So what I mean is, you see this here is this here is possibly the $4.50, the $4.50. Okay, so why am I saying that? Well, this, let me correct myself a little bit here. Actually, not correct myself. Let me do something else. Yeah, is the measurement is off this, because this is what's happened so far. But if we were to follow the same pattern as we did here, we would take it from here, wouldn't we? Of course we would. So there's the fib there to there, because that's the all-time high. Now the 272 here is $7.31. Okay, so now again that will be more more realistic to this point here, yeah. So now the point about this here, where's the bottom here, and the $4.50 is based on the price action of the bull run to date, where the all-time high is, if you base it on that, is that would bring it up to about here, is it? Yeah, the 4. Anyway. So now let's look at this one for a sec, yeah. I'm going to go back to log. Okay, clear this off. I'm going to blow this up a little bit. So I'm going to have a look at what happened here, yeah. The same thing. I'm going to take it through. I'm going to take it through the fibs, just to get an idea. So now the question I'm asking myself here is, here's the bottom, and if I put the fib as I have been from here to here, will it give us this target? So just simply from here to there, will it give me the target? It only gives me the target to here. So if I brought it to here, so now from here, the bottom, to this top, okay, is getting closer, get me closer to 272. I would suggest that the measurement is from here to here, because it gives me the 272 as the top. Now I know I'm putting that into fit. I know in hindsight I'm looking back and I'm just making a fit. I know I'm doing that. You know, so we're aware of that. Okay? We're aware of that. Now the reason why I'm doing that is because this one is just so obvious. This one is nice and clear. Look, there's the previous peak. And the 272 shows itself nice and clearly here. Is to do the same with here, is put the from here to there and look for the 272. But for now, I want to focus on this. I'm going to come back to this, but I want to focus on this because of more locally what this is going to show me. Then I'm going to put it on this and put it up to $4.50, and we're going to look at the fibs and the way things can potentially play out. That's why I'm doing it, yeah. Because I'm trying to focus on what's coming next rather than go too far ahead. Okay, so now from here to here, okay. Now let's look what happened. They came back, hit the golden pocket, bounced along it, and then broke out. Came up to the 1786. Wicked off that. Again, if we zoom in, and again, and the part of what I'm doing here is that when we're moving into new price action, when we find the range to measure, is then it gives us targets to look for when price action above is unclear. Yeah. So now look at this from here. Look at price action comes back up and changes here, right on it, and then up it comes. Is look how it retraces. It back tests on this. The back test gives it a pump, and then a pump all the way through to the 1786, and then a drop back, and you go, okay, drop back to here, okay, come back to here, and we're watching it. What's the next potential is dropping back to here, and it didn't make it that far, But again, we're looking at that, you know. Then it retraces back up. So now look, it pushes through and it's getting rejected. So now it comes back down and it comes back from the 618, gets rejected back to the 272. So now if we see it getting rejected, is it going to hold here? So again, if we're in a short here, is where are we going with this? Is it going to get rejected? You know, yes it is. Then we go back to the next line, yeah. Now again, I know this is over days and we'll be mapping it out in the smaller time frames as well. But I think it's good for us to begin to use the fibs over the days, especially when we're moving into a new price area and it hasn't been mapped out. Is we need to have some guideline to follow, and the fibs are it. There's no other indicator that will give us the mapping out as clear as this, yeah. So now look, we're back here. Get a bounce off it. We'll come straight back up to what one is this now? Come straight back up to again the 618. Okay, now look at this. This is XRP for you. Look at this. All the way down. Everything that we got to, all the way back down. Bounce. And then down. Nearly look how close it came. Nearly back to where it started, yeah. Fantastic trading opportunities. And back to the question of how do you trade this? How do you know this? Like I know there's such a pump here that there's going to be a retrace, okay? There's going to be a retrace, but then knowing this is knowing that it's going to come back to this. And again, this is the court case. This is the court case. Is the court case brought down that extra bit more, yeah? So from here, look back up, retest back to the 702, and then look, testing on the golden pocket, or the 05, excuse me, the golden pocket, pushes back up to the 1, gets a rejection, back again, bouncing, you know, and then up it comes again. Okay, so now all the way back up to the 1786, and then it look right back down practically to 1 again, and then all the way back up with retests here, all the way back up to the 618, sits on this, drops back, bounces on the 272, up it comes, testing it as it goes along. Look at this, rejection, comes up and gives it another go, and then you have a push. Retrace, breaks through, back test, retraced, sits back onto it, drops through, comes back up, does sideways on it, and then now we're back down again. So you can see this is the bear trend up. Actually, you would include this in the bear trend up. This didn't last for very long. This drop went from the 18th of December to the 29th of December. So this is like 9 days. 9 days of glorious dropping. And then here's the bear trend, here's the sideways, and then, the bull trend, here's sideways, and again here's the bear trend. So look, it drops back to 618, sits back up onto the 786, drops through again to 414, comes back up and to the 618, and then drops again to the 414. So now part of what we're looking at is it reached this peak here. It reaches peak here. This is messy. This is messy to read. This is messy to read. This is a peak. There's one step. Okay. There's 2 step. No, because look, there's the W. Okay, if this is the base, is 1, 2. Look at this. Look how tight this is. Look at that. It dropped all the way back to the same level here. So 1, 2. There's the push away. So this is the W. Here's the scoops in it. So where's 3? So 3, I'd have to say, is up here. 3, or would you say this is 3? No, I'd say this is 3. I would probably do this. I'd say that's probably it. And look at this in the middle of it. And again, while this is happening, it's in hindsight afterwards that you realize that's the W. It'd be very hard to read. Very hard to read what is happening. It's not that. You can't have that. You can't have 4 so long. And you can't have that either, because this is higher. So you can't have 3, can't have price action where 3 has price action higher, previously higher than it. So, you know, it can't be this to there, because you're ignoring the fact that it came all the way down to there. So it looks like it'd be something like this. Look at that for volatility. Crazy volatility, yeah? So the point I'm trying to make is it still went to the 272, topped it, set on it, then dropped back down. And again, this is where you get what they call the part of the bounce, is it comes down, and then again what does it here actually? It comes down, and then the dead cat bounce and comes back up. Equally here is down, and this is mountain peak, another opportunity. So part of what I'm pointing out here with this is that you got your price. If you don't sell at the top here and you realize this is the top, you get your dead cat bounce, and then you're getting your resistance peak. This is the time to start selling, yeah? And you got to remember that when at these peaks, everybody is, well, not everybody, a lot of people are selling. So you put your sell order in, is your sell order might not go straight away. So you sort of have to be a little bit prepared with your sell orders to get them in on time so that they'll actually go through. Because you might put a sell order in here, it might not sell until down here. Until the exchange can actually process all the sell orders. So you just got to be careful that you might sell, you might put it in here, but it doesn't get sold to here. So when you can see things are coming up and then you miss it, you don't do it, and it drops back down, you see it come back up again, is you start putting your sell orders in when it's down here. You start putting them in up for here, you know, or somewhere close to that. You don't wait until it gets there, because there could be too many people doing it at the same time, and exchanges can't handle it. Yeah. So this is my point. This is one of the things I'm just trying to point out today. Yeah, is when you take your fib from here, it gives you this. Okay. When you take your fib from here again to here, and again, I wasn't sure. The previous one was obvious. This one wasn't so obvious. I know I back tested it, but I think this one is obvious. So I definitely think this one is obvious. Okay. So now, if we put this here, from here to here, okay. And this is the main one I've been using lately, just for observing price action in here. Okay. So this is the main fib I've been using at the moment. When I'm looking at the bigger picture, yeah. So here we are. And zoom in. So you can see that we dropped through the golden pocket here. It dropped, found its way, tested back up, tested it here, broke through, actually got rejected, broke through, back tested, pumped up, got rejected, and then pushed up through, back tested, and then failed. Came back down, pushed up a couple of times, got rejected, down it came, is pushed again, another rejection, came back up, is sitting on it while it's getting rejection, is getting pushed back up. Here we are again. So now is this here is the 72.69. So this is the golden pocket here. So now we are on the daily where we're looking at it coming down. So we get a daily here because it's already retraced here. So now let's look at the way it happened here. And crypto clear pointed this out. See the three drops? Is look at what happened. The first one you get the drop, the retrace. The next day it comes in, you get a lift before the drop. So this is why I took profit today, because I wasn't in a good position for this. So look, it peaked, it drops, a retrace, comes in, a little lift, and then it drops. This is only two. Look, it drops, retrace, comes in, little lift, and then it drops. Now again, this is also happening on the. This is all happening on the 702. Let me zoom this in a little more. This is all going on the 702, yeah? So now, there's a retrace again. It spikes up, it drops, small retrace again, up it comes, and then it drops down. Is the same with this one here. Up it comes, down, drops, little retrace. Next day is always a retrace and then a drop. Drop, retrace, in, up, and then down. Again, this one came higher here. This one came higher. Is a drop here, retrace. Look at how much this one come up, and then down. So you can see that as it's going further into this, the bulls are getting stronger, so the retrace is getting stronger. So tomorrow is the end of the day. It comes in. We can expect a pretty strong retrace. So again, the peak here is 70, 77, 85. Is anywhere between 75, I think, and 78, possibly even 79. Is the one I don't think is going to break is this. And the reason being is that this is the impulse wave that hasn't had its full correction. So there's the top here. There's the bottom here. Okay. There's the top. This is Bitfinex, isn't it? Bitstamp. So the figures are a little bit different here, yeah. So now the 786 is the correction on this is 66, 65, 65, 6, 66, yeah. So it hasn't happened yet. So most likely our 3 days of red candles are going to come down and hit the 786. It may come down. It may come down and want to come closer to the 414 or the 618. And the reason being is that this is where in this greater retrace, the impulse is, it came down. This is the point where the bottom of the deepest correction is here. It comes back up. It came down close to it again. So always with XRPs, when you get the pump, it likes to come back very close to where it kicked off. Yeah. So the start of this arc would be, or the start of this pump would be here. So it likes to come back to it. This here started this one, likes to come back to it. So this one here is, there's a good chance that it might like to come back close to its bottom. So one target is the 66, the 786. But then another target, as you measure it now, would be possibly the 272, the 1272 or the 1414. And again, you can see if you put a line like this, yeah, do something like that. Even if you didn't like this, I like to get the wicks touching. Again, the 414, and that's at 55, 56, 55, 9, 56, 58. So anywhere around here. So it'll be interesting when we get the candles for tomorrow. If you look at the second candle, the third candle, the first one was the smallest. Third one was the biggest one here. This one here, it was I forgot to do that earlier. This is a bigger one. It's almost like a retrace on the way up. Yeah. This one here, look at the second one was much bigger. The second one was much bigger. Second one was much bigger. Again, bigger, and then bigger, and bigger again, as much as the retrace. So now, if this is the size of this candle, okay, and potentially this is the smallest candle of the 2 or the 3 candles that are going to come, is you can expect the candle tomorrow to be quite a substantial candle. And what I'll be looking for is, it's possible that this will do a strong wick and come all the way down and hit the 786, hit the 66. And the question is do we get a third candle, or is this it? So I think, for me, I'm out of my trade at the moment, so I'll wait for the new day, and I'll wait for the pump. When I see it exhausting itself, this is where I'll go in. I'll be looking to take a good profit at 66, at 786. And then, but I'll leave in a decent amount as well. And then when I see the next day, if it looks like it's going to go down more, again, I'll dollar cost in. And with this one, I'll dollar cost in fast. And what I mean by that is that as it goes down, I'll dollar cost. I let my entry point come all the way down as close as it can be, so to speak. I'll follow it down, because if that third candle is going to come in, let it do its thing, follow it down, because again, I'm looking for my target down around 50, 58, 59, and I'll be taking full profit there. So I won't be staying in after that. So I won't mind dollar costing, following it down quite quickly, So that's the gameplay for tomorrow, yeah. But again, you can see I'm using the fibs at a more local level. So now after that, which is part of why I wanted to have this conversation, and again do a little bit of a back test in it, yeah, just to show you, yeah. So what can we expect on the way up? Well, I think for one thing is a lot of volume, a lot of volatility. So we got to be really careful with our DCAing is. You got to really work on our DCA and get position, and then once we see it's going our way, then we can start to load in. It would be a nightmare to be loading in here and then it getting caught. Yeah. So now here we are. Look, from the local bottom, as in the bottom of the bear market, all the way to the local peak of the 197 is, and again, I'm mindful that we'll do these together. That'd actually be a good idea. Is if I put this one in as well, because you'll see correlations between them. I'll do it here actually. You'll see correlations between them. So here is the previous bull run, yeah. So you can see that, and then this is the recent. So now look at this. As we go up, is the first one is the 1272, is the 1786 here. Is the 1414, they're not too close. The 272 here, although this is back on log again. Okay. You see, this is where I get this is where I get challenged with logarithmic. This is where I get challenged with logarithmic, because I'll put this here. The 272 is to there on the log, so that worked. Look, from here to there, 272, bang on the money, super duper. Okay, when we put the log on this one, it gave us this. Great. Now, when you follow the same process from here, we do it now. Look, we're going to put it from here to here. When we go to the 272, the price is 12,870. So that's that you know, I know there are people on influencers on YouTube talking about those amounts of money, and I know why they're saying it, and I actually believe it. I just don't believe it right now. Maybe in 5 years, you know, not in the next bull run. Excuse me. But this throws me out. This throws me out. When I take it off the log, I'm lost now. Put it back in the log for a sec. Okay. When I take it off the log, okay, now this is the one that we put it on, and it gave us this here. So let's do it off the log. Okay, and the 272 is the here. It just gave the first leg up. You see, that's frustrating. That is frustrating. Okay, so if I put this here to the first leg up here, and I go to 272, it doesn't even take me to the. Okay. If I put the here to 272, well, there's the $4.30. Okay, that's okay. So that gives me $4.30, and we're not on log. Now, when I put it back on log, so look, here's the, get rid of these, put it back on log, I bring it up to here. So this is on log this time. 272 is $74. Okay, it's $74. Okay, now I get it. Okay, so now even on log here, see, this is the thing. Back here, 272, right to it. So if you're to follow the same logic, there's nearly 13,000. this one here, 272 is $74. So this is my challenge. This is my challenge with this, is that it worked here, bang on. But if you do it on this one, it's given figures that are seem to be just way off the chart. Even $74, excuse me, even $74 seems like a lot. Now I will say that from here to there, this down here, it was not a cent. It was 0.00488. So it wasn't even 1 cent. It was half a cent. 0.00488. If it was 0.005, that would be half a cent. 0.01 would be 1 cent. So at this price here, it was basically half a cent for an XRP. And then it went up to $3.28. So if it was 1 cent, that would be 1 cent, $1 would be 100%. $3 would be 300%, 335%, and then multiply that by 2, 670%. XRP went up 670%. 670 times it went up from there. And that was, oh, there you go, there's 66,000. So now I know the power of Ripple and XRP, where it's going. These prices, I believe, what these prices are quoting, I do believe they're realistic. But do I believe they're realistic in the next pump? It's hard to imagine. But again, look, this from a half a cent. Could you imagine on the 18th of February? Let's say where are we now? Where are we now? What, the 13th, 10th of March? 10th of March. Can you imagine that today is the 10th of March? Okay, 2022. Let's pretend the price is half a penny. It's half a penny, and on the 10th of March, today it's a half a penny. And somebody said to you, on the 3rd of January, in 10 months' time, that $100 you put in here is going to multiply 660 times. 660. Your $100 is going to be worth 66,000. So the $100 you put in a year's time is going to be worth 66,000. Would you believe that? Nobody would believe that. You'd say that's impossible. But it happened. It was the best performer of the bull run last time. So now, on this bull run, in the top 10 coins now, XRP is the only one that hasn't broken its all-time high. Now we can say it's because it's the SEC case, and it's not because of that. The SEC case is just part of the reason why. It's more to do with the positioning of the financial markets and literally the SWIFT system. Is XRP isn't really going to take off until it comes out proper officially that it's the Ripple ledger that is replacing the SWIFT network. Once that comes out as the thing, it's officially announced worldwide. Everybody's adopting the Ripple ledger to replace the SWIFT system. Then $74 is nothing. Is going up to $10,000 is more realistic. I don't know how long it will take, but I think it will go there pretty fast. And the reason being is that Ripple will be used for the on-demand liquidity. And I mentioned there last week that it already bought back last December close to again a half of 1% of all the Ripple or all the XRP that's on the market. There, I think there's like over 56,000 or something, or 56 billion. Is they bought back 330 million XRP from exchanges last December. So there's 100 billion XRP in total. They have just over half, I think, out on the market, and they bought back 330 million in December themselves. So they bought back nearly 0.0, not 1%, but 0.5% of all the available XRP. Ripple bought it back themselves. So you can imagine if they did that every month for a year or two, is what would happen. And that's the start of it. So you imagine that they'll start buying back more when banks start to buy it in big numbers, when governments start to buy it, to use for on-demand liquidity services. Because it doesn't have to be RippleNet who offers the on-demand liquidity. It can be banks offering it to their networks as on-demand liquidity. So those numbers can absolutely be realistic, but for the purposes of what we're doing right now, is I just want to get a basic mapping out of it going to $4.50 or so. Okay, so I'm going to say one more thing on that, which is to me seems a little bit ridiculous. Is this pump, the all-time high on the log, is it gives us an astronomical number. Okay, when we take it off the log, okay, this is the ridiculous part, yeah. It gives us a number of $7.50. $7.50 sounds reasonable. Okay, it sounds reasonable. But then when you look at $7.50 for this going 660 percent in 10 months, and it hitting $3.33, that the next bull run, this is the ridiculous part, after doing 666 times its initial price down here, the next bull run, it's only going to go from $3.30, and it's going to do 1x and a little bit more. It's going to double itself once and a little bit more to go to $7.50. So for it doing 660 times its beginning value here, 660, it's going to do less than 2 here. How ridiculous does that sound? How implausible does that sound? So it just is not right. It just isn't. But why? Why did it do this? Come back to this and floundering here while everything else is going to the moon? Is the reason being is that this market was speculation. 2017 was speculation. The amount of coins on the market were very, very few and an awful lot of speculation. No utility at all. And then there was the altcoins. So this is where altcoins come in. And there was lots of speculation in them. Then between here and here is when this started to kick off again here, is because decentralized finance, those altcoins started to find their purpose. They started to decentralize finance. However, I have a question for you. Why did XRP do the biggest pump, was the best performer in 2017? I'll explain it this way to you. Is you have the initial first out the door, which is Bitcoin. Okay? And Bitcoin was meant to be the new money, the new digital money. It turned into a store of value, which is brilliant. Now, why is it a store of value? Is because it's restricted. Is the way the process works. It's very expensive to to manage, but very secure. So it's a store of value. Digital gold, brilliant. Well, what do we need? We need a coin that's more adaptable. We need a coin that actually can be used more than just a store of value. So smart contracts came. So Ethereum is Bitcoin 2.0. We put smart contracts on it, but it still used the same security mechanism that Bitcoin used. So okay, you got all these smart contracts, but it costs a fortune to run the service. It's not viable. So now there's meant to be an Ethereum 3.0, the update that will reduce the cost of the gas fees for Ethereum. And again, that's slowing the whole market down because Ethereum has cornered the marketplace with regard to smart contracts because so many companies, so many coins are using Ethereum as their platform, as their blockchain. Now there are better ones out there, and Terra Luna is a simple example. Terra Luna is way up at number five now or something, because it costs a lot less than Ethereum. Cardano, all these other coins come in. But where does XRP fit into all this? XRP is the third generation. Is XRP came and said, okay, we're going to reduce the fees. We're going to be less central. It is decentralized, but it's not as decentralized as the others. Is we're going to reduce the fees, and they basically XRP could run smart contracts from the very beginning. Then you got to ask, well, Roy, why didn't they do that? Why is XRP in the doldrums and Bitcoin and Ethereum are kicking off while they're both hamstrung? Bitcoin and Ethereum are hamstrung with the way they're. I'm not sure. There's proof of work and proof of stake. I always get these mixed up. Is one of them is very secure but costs a fortune to process the information. Yeah, so they're hamstrung. XRP isn't. But then why? Say again.
But proof of work is secure but slow and costly.
Yes, there you go. I always get them mixed up. So proof of work, it costs a fortune. So the reason why XRP is smart contracts right from the beginning, and super fast, super cheap. But why aren't they pushing themselves forward as a contender for Ethereum? And the reason why is because Ethereum is smart contracts and they're trying to go straight to market, so to speak. Where XRP is going, no, we're going straight to the center. Well, what does that mean? Well, you gotta go to where the money is. You gotta go to the financial system. And the only way that digital currency is going to become legitimized is not just regulations, but it has to have a system, that there has to be a system that the whole core financial market can go onto. And XRP went straight for that bullseye. And they've been integrating themselves into that market. They said, it's not just that we want to go onto the blockchain. We want to be able to take the existing system and put the existing system on the blockchain. Because if you don't offer that, they won't take the service. They won't just jump from one to the other. They will want to be able to use both for a period of time until they get relaxed and confident in the new system. They'll fully let go of the old system. And that's what XRP has been doing in the background, is offering their services, going into banks, going into governments, and getting in and actually being a utility. So XRP, that's what they've been doing for the last 4 or 5 years. Their intention was never to be a retail coin. Is they put it out there because it helps finance the company. So they had to do it because it's a way of financing the company. But it was never their intention for retail to be their core goal. It was the financial system. So they've been quietly in the background banging away at this all the time and being the coin of called the banker's coin, and what all the other digital coins that are rebels and we're going to change the world is okay, but you're not going to change the world unless the world chooses to go with you, or you're always going to be on the sidelines. So the people running X or Ripple knew immediately from the get-go is if you don't bring the core banking system with you, they'll never embrace you. So that's what they're doing. So now why is Ripple seemingly like it's in the doldrums while everything else is pumping? Because everything else is pumping on speculation. It's pumping on speculation. And Ripple is now in a court case. And that court case is really to do with America looking to secure its position as the dominant financial controller in the world, because that's what it is at the moment, and it's looking to secure itself in that, and it's trying to find its way to regulate itself and manage its way into this. So that whole court case has everything to do with America doing the deal with the rest of the world to facilitate everybody shifting from Swift onto the blockchain. And it has to work in a way that will work for them, that they can maintain their dominance in it. And rightfully so, because they're the guys who are dominant at the moment. So that's the gig. So now, if you look at what Biden did yesterday by his executive order, he did that because the deal is already done. He wasn't going to say a word until the deal was actually done. So him coming out and saying, oh, you guys need to figure all this out and who's in charge of what, it's already decided who's in charge of what. The deal is already decided. They know how to move forward now, because he wasn't going to say anything until he had his answer. And that's the way it works. You don't say anything until you have your solution. So the solution is already done. So now it's a matter of starting to bring this to market, is to begin to integrate the digital world into the analog world, and to shift everybody over onto the blockchain, onto, as I believe it, the Ripple ledger, because it's already doing it with so many banks and countries in the world as it is. So I promise you, you're going to hear very, very soon, large companies in America are now using the Ripple ledger. And then it'll come out, well, actually they've been using them for the last 2 years. You're going to hear banks, and when you hear the companies and the banks on it, that's all of a preparation to lead into the American government. The American state is moving on to the Ripple ledger, the whole world is. Because the UK has already said it, France has already said it, an awful lot of countries in the world have already said it, are already on it. So they're waiting for the big gun to come in and say, yeah, we're in too. So that's all coming. So looking at the Fibs and why is XRP in the doldrums like this, it is going to be a rocky road, because they don't want the retail in this. You're going to see where's that nasty spike again? Where is it? You're going to see a lot of these. A lot of these. A lot of these. It just frightens people off, yeah. When you learn how to trade them and you learn how it works, they are just fantastic opportunities. So anyway, so that's not what I think is happening. I firmly believe that is actually what is happening. So this is all just it's holding back, until the deal is done. And when the deal is done, is I think there's going to be a phase here where it's quite possible that we'll get the pumps, and it'll be a little bit, and again it'll be slow. And I think what's going to happen is between now and the next while, I think it's already happening, is I think XRP is going to start getting bought off the market. And what I mean by that is that you're going to have the likes of the guys who buy Bitcoin and are never going to sell it. Raoul Paul and those big guys, they're buying it, and they're basically saying they're going to hold on to it. Yeah, you're going to have people companies and governments buy XRP, and they've no intention of selling it, and it'll become scarcer and scarcer as it goes along. So I think that process is going to happen over the next year or two. So we're going to break the all-time high soon. I definitely see it can go on a pump going up to the $4 to $7. I can definitely see it doing all that, even going up to the $27. And I think that is just warming up. I think it's only warming up. I find it very difficult to believe that XRP isn't going to go and start doing multiple hundreds of dollars at some point in this bull run. Simply because the news is going to come out over the next, a lot of news is going to come out this year about what the world is going to do with digital currencies, and if they're moving to digital currencies, there needs to be a centralized blockchain that the world global financial markets are going to move on to. It's just clear logic. There just has to be. It's the bottleneck that's going on at the moment. And until that's resolved, there won't be an internet of value until there's the global financial markets are up on the blockchain, and that they have their system up and running. It can't happen. It won't happen. So I think what's going on now with regards the fact that SWIFT with Russia now, and they're talking about, oh, let's take some of the Russian banks out of the SWIFT, is they've never done that before. So why are they doing it now? I think it's just it's preparing people for it. SWIFT was this immovable thing for the last 70 odd years. It's been static, unchanging, constant, and don't mess around with it. All of a sudden they're messing around with the SWIFT. They're taking Russian banks out of SWIFT. That would be unthought of, unheard of, not possible. But now they're doing it. And I think because, again, it's a sign that SWIFT is movable. It's not this immovable thing anymore. It's moving, it's changing. So the fact that they've done that is a really clear sign that SWIFT is on its last legs, so to speak. So anyway, you can see me getting on my waffling, my rant here a little bit. So let's stay off log for now, yeah? Let's stay off log, and let's just put the fibs on this, and let's look locally at what we can expect. Because that's really why I wanted to have this conversation today. It's really why I wanted to have it, yeah? All the other stuff is, I'm fascinated to see how it's going to play out. Because I think a lot of it is going to start kicking in this year. A lot of the bigger news. Anyway, so sorry, I'm not going to finish. I'm going to finish what I'm going to say here. So the XRP, the third generation. The third generation already was in a position to be a utility, because it went from proof of work to proof of stake. It might not even be proof of stake. I know the Ripple ledger there's something different about the Ripple ledger, that it's not a blockchain like XR or like Bitcoin or like Ethereum or like most digital currencies. It's a ledger rather than a blockchain. Now I don't know the difference, but it seems to be far more adaptable and interoperable. So XRP, from its beginning, had the ability to be a utility, but the world wasn't in a place for a utility. It's all speculation. So now here is, I believe that it's in the doldrums at the moment. When XRP goes here, XRP is going to go, and it's going to, the transition is it will go, the crypto market will go from speculation to utility. And XRP is going to be the first utility. And it's going to be the most important one, because it's going to get the global financial system up onto now I'm going to say the blockchain, and then let me just say the blockchain, because I know the ledger is a little different than a regular blockchain. I don't know what it is, but I know it's a little different. But it puts the financial system, the global financial system, up onto the blockchain, and it gives them all access to digital currencies and the internet of value. So that is the first utility. It has to be the first utility, because utility means that money needs to be exchanged, and it needs to be exchanged on a blockchain level. So you have to have the financial system before anything else. It's a bit like your touch. It's a bit like life force. Is, you know, the first thing you feel is alive. This is actually really true. Think about it. Is touch your hand. Is touch the chair. Anything you touch, the first touch you're always feeling is aliveness, because you have to be alive to actually feel. So what's the first thing we all feel? Is alive. And then through our aliveness, we feel everything else. So this is the same for the blockchain. Is until the financial system is up on the blockchain, is the rest of the financial system, it can't be fully interoperable and integrated until that happens. So XRP is that system that they're going to use. So this is going to be the first utility. So you can imagine now, what's the value of the first utility? The one that's going to establish Web 3.0 and the Internet of Value. Put a value on that. So you can see why with Bitcoin you have gold. You know, it's a value in itself. Where XRP is going to have that same value, but then equally, like a smart contract is with Ethereum. Ethereum has its own value, but then the value is also that does smart contracts. Where XRP is its double value is extra, is the on-demand liquidity. Is that when money is being exchanged, when values are being exchanged and exchanged instantly between all different types of value, is XRP and a bunch of other coins will be used as the on-demand liquidity. So nobody needs to have an Ostro account. Nobody needs to hold a bag of money or a vault of money, because they're constantly changing and it's in transit all the time. Is they'll just rent it out for the instance, the few seconds that it's being transferred, it'll be transferred through XRP. You know, and a few other coins that will be used as part of the same service. So the money or the XRP will be continually rented out multiple times a day for pennies on the thousands. But it's the amount that it will service, is the value of an XRP for the service that it provides will be enormous. So it's worth it's worth for Ripple to buy it back. To buy it back and lease it out billions of times a day. So they bought back 330 million. They're going to try and buy back as much of it as they possibly can and get it out of the hands of retail. You know, so yeah, so the price of it is going to rocket. I know a few people have said that once the regulations come out, or once the court case is over, is Ripple might not be available to buy anymore. I believe that could be a strong possibility. Is that it could be just part of the regulations, is that, well, if you were going to become part of the on-demand liquidity for the global markets, is we need to restrict its access, who can buy it. So if that was the case, that would actually work really well for anybody who has any Ripple at all, because it's just a matter of time before they're going to offer you some outrageous number. So anyway, I'm waffling on. Okay, so now let's look through this, and then let's forward look. That's what I want to do, yeah. And then our conversation tonight will be over. I know I'm going to chat with Farouk. Is Farouk here? Farouk is here, yeah. Farouk, maybe we'll have that conversation tomorrow. So
Yeah, sure.
So now look, we're starting here. Here's the 236 again, breaks through, gets rejected. You know, support and resistance, support, and again, even just looking at this here we are here. Is if we're going to get our drop that we think is going to be the bigger one, is the 236, the 55 there, 54.9. Is this looks like the limit? Is this looks like the limit? Is could we get it coming all the way back down here? Well, again, it likes to come up and come back down, you know, and come up, and then it pushes all the way up here. But look, it came back to here this time, come all the way up here, come back to here. It seems to be that this is the new support line. Black swan event, something terrible. I suppose it could come all the way back down to, I know we're talking about 20, 29, 27 cent. Most likely though, it'll come back to here. And if it just corrects the local impulse that it hasn't corrected yet, it'll be back to 66. That's what it seems like. So now here we are here. Look, it does a retrace on the 05. Does a back test, breaks through the golden pocket, does a back test, does a back test, does a back test on all three of these, pumps, then we get the correction, back testing as it goes along, drops through to the 05 again, then it gets caught and comes back up. And again, you can see it going sideways here, back down all the way, and here spiked through, came back up, spiked through, you know, tried to come back up through, got rejected, and then came down. So this is one of the conversations I'm going to start to have more, is putting the fibs on the daily and starting to look at the bigger picture through the daily. Look, if it breaks this, gets rejected, where are we coming to? We're coming back down to the 236. It comes up, gets rejected again, okay, back down to the 236. Look, now it's pushing up again. Now where are we going to? Obviously we're going to the 05, gets rejected, look, gets rejected again, and then wants to have a go at it again. So again, this is on the daily, is the third time it breaks through. Where are we going? We're heading for the golden pocket. Again, rejected, back down to the 05, back up to the golden pocket, back down to the 05, back up to the golden pocket. Again, this is consolidating here. Lots of swing trades here. If we were paying attention to this on the daily, we'd see some fantastic targets just going from here to here. Okay, and look, here's a push through, back up to the 702. Now we know that because this is the peak, excuse me, this is mountain peak. Skyline, mountain peak. So we're looking at it's pushing through mountain peak. Where's it going to go to? Well, mountain peak's either going to go to the 702 or the 786. But here we find the 3 steps up. Here we go, 702. Here's our short, in we go. And we're following the 3 steps down. Okay, and then back up again. Sitting on the 05, pushes through the golden pocket again. And now here we have the big drop. And this was that recent bear trend that we were trading. So it breaks the 05 all the way down here. It didn't make it, come back up for a fight, got rejected, all the way down, hit the 236. So you could nearly say that when it broke this, came for a back test, got rejected, we're heading down for the 236. So now there's a double bottom on the 236, up it comes again, double top here, coming back down, almost looks like a replay, you know, it comes up here, then it's doing this 1, 2, 3, little rise, and then drops down. So here we are again. Does this lift? Does it lift? Does it drop? Let's see, this is where it gets a little bit different. Does this drop here? Oh, well, maybe not. Does this drop here? Does it rise? And does it drop? So does it drop? Does it lift here? And then does it drop? So it definitely looks like 66. There we go. It definitely looks like 66 is most likely the target. Most likely the target. But again, could it go to here? Yes, it could. Okay, so now, where's it going to go? It might come back to the 236 at 55 or thereabouts. Let's say just 66. Okay, we get a little bit of sideways. Now it's going to come up. So this is why I'm doing this now. This is actually why I started this conversation in the first place. Is what can we expect? Well, we can definitely expect it wants to go back up to the 05. There you go, 104. Okay, and what can we expect at the 104? We can expect a rejection. Okay, where might the rejection come from? Well, listen, we put a fib on that now. Let's say this comes to the 06, okay? So, or 66, my apologies, 66. Let's say it goes to 66 and does an impulse all the way up to the 104, okay? So now we'll do a reverse. So from the top of the impulse to the bottom of the impulse here, okay, and we'll go, look, is the reverse down, the correction is going to come down. Now the question is, where is it going to come to? Now this is one of the things when the volume comes back in, when the bull comes in with volume, the corrections are less. At the moment, we're getting the 786, which is a deep correction. A 786 is what's happening. Rather than the golden pocket or the 702 is the 786, where the shallow one would be the 05. Now the reason why is because the bears are still pushing and the bulls are pushing, so we're getting this volume and we're getting these deeper pumps and corrections. But when the bears give up and the bulls properly come in, those corrections are not going to be as deep. So now, most likely, the range of this correction will be 85 to 73. And we split the difference just for 80. Okay, so most likely, we're going to get a movement from here to there. And then we're going to get another one from here to there. And that is setting up our next arc. Okay. Probably setting it up something like this. Something like that. Might be a little bit like this. There we go. It'll be something like that. Here, there, then back up to, again, where will we go? Let's do the reverse again. So from the fib from here to there. Okay, and let's be generous and put mountain peak, because again we are the bulls are coming in. So let's say mountain peak's going to pop back up to the 786. So we're looking at hitting the 104, coming back for the 80 or so, and then hitting mountain peak at 96 or so. Then probably coming back down and hitting the 05 or so at 85, maybe the golden pocket, and then we're going to have our breakout. Okay, so something like this. So now we got to get past the 105. So okay, where are we going to go with that? Okay, well, there's always a challenge with when you're coming up to the golden pocket. Look, there's a rejection. Look, it gets to it and gets a rejection. But now we've got a bit of momentum behind us. So look, here's the battle at the 05 here, you know. But now this battle here is just a retrace to get that extra pump. So look at this. It breaks through and back tests onto the golden pocket and pumps up. Okay, so now we are around 104. Could we go from 104 all the way up to $2? I don't think so, because I think we're going to do 3 legs up. This is one. We come back a little bit and then we'll go for the third leg. So it's quite possible that the next leg is we'll break up and we'll at least hit the 702. $1.41. And again, look, $1.41. So it's quite possible we'll come up and we'll do a $1.41. I remember we tried to break that and we couldn't. Look at, nearly got there, came back down, tried to come back up again, and then failed. So it's quite possible $1.41 seems pretty reasonable. is, are we going to go and do a load of sideways? I don't think so. I think it'll be more, and again, I'm putting this out there, it'll be more like this. It could hit $1.41, get a retest or a rejection, and then back onto the golden pocket, and then up it goes. So I think we could hit a $1.41, come back to say $1.32, $1.26. So I'm going to put these in. I'm going to put these in a synchronized line. Yeah. So this isn't a correct timeline, but you'll see what I'm doing now. Yeah. So here, you'll see what I'm doing now. So from here to there to here to there to there to here, and then we'll get to back up to $1.97, and I think we're going to get probably a strong rejection. So this is one leg, this is another leg, yeah, from here back to there, up to here. Now 1, 2, 3, okay, I don't know whether we're going to come all the way back to the 786. Well, we'll definitely come back up and test it again, and we'll be doing a consolidation here, yeah, where mountain peak might come back up with something like this. So we'll be doing this. And then it up again. Again, I'm just mapping this out, yeah. And I think, okay, now this is what I'm not sure. This will be one leg, the W. There you go. This will be the 3, or somewhere around here. The 3 will be doing the W, because it'll battle here, you know, and then you get the pump. So $2.50 is we get a nice clear break of that. Might even go as far as $2.70. We get that nice pump, and then what we'll have is might even come back all the way to $2. But we'll have a big retrace, because we'll have done an initial an initial pump 3 steps up. So we'll have our 1, our 2, and our 3 is now from here. Again, we'll go sideways. We'll go sideways. It'll consolidate, and then we'll kick off again. So some of the targets is we're going to be hitting the 196, 197. I don't know what that retrace will be. I'm putting it there. It's just a target. And then from there is, again, it's gonna go to one of these fibs. Is maybe more realistically, if you remember before, 3 on the previous ones, 3 was the 618. Okay. that's actually more realistic. Is when it breaks the $2 or $1.97, is I think the next target is going to be the 1618 at $3.11 or so, and this is where we get this going on. We'll get a bigger consolidation here. So we'll be hitting somewhere around here, and we're going to have these back tests. You can bring it down back to $2.40, and again we'll have a nice big arc here, lots of swings in this, and then we'll have the breakout, and again let's say it's a spike through. There's $4.45. You know, you'll have the dead cat bounce, comes back up, gets rejected off it. Then there's the bigger one, you know, and then we'll have a bigger correction. Oh. We'll have a bigger correction where this could come all the way back down to let's just say the 272. 272. Back up here. You'll have this type of thing going on. So that again here, and this will be our new I don't know whether that, I think that'll be a daily, and again this will drag out over 6 months or so. Maybe 3 months. If it's 3 months, it's a 4 hour. If it's 6 months, it'll be a daily, and then we'll head off and have another breakout, and then up we go, and we'll tear off again. It'll be something like that. Is if we wanted to amplify that and say, listen. What happens if it shoots up to $7, $8, $11? Is it will still be the same. It'll still be the same pattern. And what I mean by that is that it'll do all this much faster. This won't take 6 months. This will take a month, and it's all sorted in a month, and then it's pumping up again. So this could take 6 months and drag it all out, or this could take a month, and then we're on for continuation, and this is just the first leg. I know we've got 3 in it, but it's the 3 steps up of the first leg, and then we have the second leg. So whether this takes a month or 3 months or 6 months, I really don't know. But then there will be another leg after that, and it'll take us up. And I definitely think we're going to at least somewhere around the $27 at least. It might take us a year from now to get there. So now we got to start thinking about when we're moving into new territory, breaking the all-time high. And look, this is up around the all-time high. So only when we break $3.30, actually there you go, is it won't be to the 618, it will be to the 786. Why will it be to that, Roy? Because that's where the all-time high is. So it'll go up, it'll touch off it. It might be a little bit short of it, or a little bit more of it, and then there'll be a big rejection. And then it's going to have to come up and break through it. And this is when the bull run begins. This is officially when XRP's bull run begins. So there you go. So this needs to come back. This needs to come into our TA. I think it would be good for us all to start getting our head around this as preparation for moving into new space and getting familiar with the Fibs and helping us see where it's going to, and if it breaks a level, it gets rejected, where is it going to come back to? And it gives us, we can zoom in then and start mapping that out over smaller time frames. But if we can see the bigger picture here, it takes a little bit of the mystery out of where it's going, why it's going there, and what's rejecting it, what's supporting it, what's holding it. Because once we break the all-time high, there are no support lines that we know of there are no resistance lines that we know of. What we can rely on is the fibs and how it seems to move with the impulses, the waves up and the waves down of the fibs. It's part of a natural cycle, and price action fits into it. So that was my real point for today, is the importance of the fibs and their usefulness. So that's it. And one of the reasons, I knew this before, by the way, and I use them, but where it's really come into really impacting on me more now is because of there's so much trickiness in where we are now. Is what's happening is so many of the indicators are pushing and pulling. We're getting so many, 1 hour it's up, the next hour it's down. The indicators are giving us so many different indications. Because of the volatility of the moving averages, there's so much pushing and pulling going on. But at the end of the day, price action always seems to follow a pattern and get to where it's going. At the moment, we're getting candles that are going up and down like yo-yos, but it still ends up. Look, it still ended up on the 236. It still ended up there. When it broke here, it's heading for the 236. How it got there, think about the drama of trying to map all this out. But look, now it's like, look, it's going down, it's heading down. Where's it most likely going to go? Well, the 236. Okay, well then look, when we're getting closer to it, look, where's this going to go? Look, we're looking like it's going to go to here. So now when it comes back up is, okay, what are we going to hit our head off? It's not rocket science. It's going to hit this, and again, it's probably going to get a bit of a rejection before it breaks through it. So we can start mapping this out. And the impulse here, that's our next arc. It's already telling us where it's going. So you can see what I mean about the usefulness of the fibs. So over the next weeks and months, I'm going to bring in more and more of this. And it'd be great if we could start to layer this element of indicators into our day-to-day mapping of things. Yeah. So that's my story, and that's what I'm telling you today. I'm looking forward to getting stuck into it with you. You can see one of my conundrums is the difference between using log and not using log. Log, not using log. I think it would be better to use log than not use it. So I'm going to start to do two different charts, one with log and one without log. And I'm going to have them together, and I'm going to use both of them, and I'm going to test both of them over the next while to see what is the difference between them when it comes to. I think in the shorter time frame it doesn't make much of a difference, but on the bigger time frame it does. It gives you very different measurements. And then I think as the pump goes, this will be my one of the things I'll explore on the next bull trend. That next pump is I'm going to use log, the fibs on log and without log, and to measure off both of them and see which one gives me the better indicator, is what works better, and what are the differences. And then as I figure that out, I'll let you guys know. Yeah. So I'm looking forward to seeing how all that plays out. But for now, that's my story. Anybody, any questions before we wrap up? Any thoughts? No? Okay. Farouk, tomorrow about the same time, we check in about 1 o'clock tomorrow and set a time?
Sure.
Super. Yeah, I'm curious to do that one with you as well, yeah. We're going to have a look. We're going to have a look tomorrow at inverting arcs. Isn't that right, Farouk?
Yeah, that's where I was going with that. I wasn't sure whether it will be it will be logical to use it in that way, or is it when going down is different than when pumping?
Yeah. No, I invert sometimes myself because it lets you see more clearly the pattern sometimes. Sometimes it's confusing. I mean, you turn it upside down and you go, oh look, there's the 3 steps. So let's I'll tell you what, tomorrow is show me what you've done, talk me through it so we can understand the logic, and then we look to see, okay, what's the most effective way to use this, yeah?
Yeah.
All right, super duper.
Sounds good.
All right, guys. Thanks for being here today, and
Thank you.
I'll see you next time.